So with regard to commodities, I think people right now is a golden opportunity. So just realize what's going on. And then instead of, being fearful, there's no fear here. You have to take action. And it's too simple for people to make the system work for them and not against them. Well, we're in a liquidity crisis right now. And the only way to keep the charade going is to keep pumping more debt into the system. That's why Trump wants people to stay in the dollar. The dollar is a unit of debt. It's not a unit of wealth. Okay, world, accept more of the Federal Reserve's debt coupons, because that's all they are, which of course makes the Fed stronger, not weaker. The world doesn't want anything to do with it anymore. That's why the BRICS alliance was made, because of, or is now being built on the back of this world dollar de-dollarization. I mean, this has been going on for quite a long time.
Goldman thinks commodities will outperform in 2025. Gold will rally to a record next year on central bank buying and U.S. interest rate cuts, according to Goldman Sachs, which is putting out a price target of $3,000 until the end of 2025. The coming inflationary push from the energy transition and reshoring of the U.S. industrial base will stress bond markets and boost commodity markets. Renowned expert Gregory Mannarino, also known as the Robin Hood of Wall Street, describes the financial system as warped, while emphasizing commodities as a hedge against this instability. From an investment point of view, commodities appear poised to outperform bonds for a prolonged period. All signs indicate the 40-year bond bull market has ended, and the next great secular bull market in commodities has begun. Gregory Mannarino underscores the Federal Reserve's manipulation of the debt market through QE and yield curve control, with central banks as primary debt buyers. The world's debt stock surged by over $12 trillion in the first 3 quarters of 2024 to a fresh record of nearly $323 trillion, thanks to falling borrowing costs and rising risk appetite, a report by a banking trade group showed on Tuesday. The third-quarter debt rise, which occurred before the November U.S. election, was already the third largest quarterly increase on record, surpassed only by surges during the second and fourth quarters of 2020, when countries and companies rushed to borrow during the COVID-19 pandemic. Concurrently, Mannarino warns that central banks are inflating debt and devaluing currencies to create a cycle that solidifies their control as lenders and buyers of last resort. Now, we present the clips of Gregory Mannarino's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
We hold commodities not because we're expecting to go up tomorrow, as a hedge against a warped system. The system is warped. I don't know another way to put it. It's just not connected to anything real, and commodities are real. It's all in fantasy land here. It's not on the elemental chart, but this is going to turn. Eventually, a debt market meltdown is going to occur at a time of their choosing, not at a time of ours. And by watching action in the debt market, looking at the benchmark, the U.S. 10-year yield, we can gain a lot of information here. I intend to keep myself long the stock market, buying cryptocurrencies, but I built on my position in commodities it was the first thing I ever did, was to build up my positions in commodities here. So I have not added to those positions in a very, very long time. I'm kind of riding. I'm not saying I won't add moving forward, but I build my positions like very methodically. For example, build up my positions here as I was in the market, of course, at the same time, but pulling profits from the market and putting that into building up a position in commodities. Now I'm kind of just riding the market. I would make a profit in the market. I'd pull it out. I would buy silver, gold, mostly silver, platinum, palladium as well. Now I don't do that anymore. I built a position in JEPI, which is the ticker symbol. I built a pretty large position. Now I'm building up JEPQ. So I like to build this, move on to this, move on to that. So with regard to commodities, I think people right now is a golden opportunity. The Fed here, who's buying all the debt? It's the central banks. They're the number one buyers of debt. They're going to keep buying it until a moment. That's why, again, I keep saying, when this comes down, what we're going to end up seeing is an uncontrolled sell-off. And I mean, not just a sell-off like we had. We're going to see 20, 30, 40. I wouldn't be surprised to see 50 basis point spikes in the 10-year yield on a daily basis when the moment actually comes here. But again, once the Fed, in this case, stops manipulating manipulating the debt market. We're obviously in full-blown yield curve control. The Fed has been involved in QE since June of this year. Right under everyone's nose. It wasn't announced, but it's what happened. They also got involved here with yield curve control, and the market's loving it. And that's why you're seeing what we're seeing here right now. It's a message. The Fed sends subtle messages to the market. We got your back. We got your back. Stay long the market. And that's what they're doing here. And people who can decipher the code, if you want to call it that, have obviously done very, very well. And that mechanism is going to stay in place until it isn't. And I don't want to pinpoint it when it's going to happen. I think, again, we're in a really bad spot here economically. The world economy is disaster area. And you got central banks inflating the global debt. It's not going to stop. Currency devaluation. It's a vicious cycle. The more they devalue the currency, the more currency they need, because now it takes more currency to buy anything. So it fulfills their agenda to become the lenders and buyers of last resort. This is what the Fed wants. What every central bank wants to do is to have absolute control over the debt market, which is the key yet again. And it seems like they're pretty much there already. So when is it going to end? I have no idea, bro, but I'm going to take advantage of everything I possibly can until that time. But we're hedged. And I pretty much think I got it right. But there's going to be a moment to get out. And the moment to get out is going to be dictated to me when I see, let's say, the MMRI spike in an uncontrolled fashion. Well, this is going to be off the charts at one point, literally, deep into the red zone. Red zone is at MMRI 300. And I wouldn't be surprised to see MMRI 500 when we get a meltdown in the debt market. And that's going to, again, but what's really going to happen, it's not about the stock market. People got to stop looking at this stuff. We're in a liquidity crisis right now. And the only way to keep the charade going is to keep pumping more debt into the system. That's why Trump wants people to stay in the dollar. The dollar is a unit of debt. It's not a unit of wealth. Okay, world, accept more of the Federal Reserve's debt coupons, because that's all they are, which of course makes the Fed stronger, not weaker. And the world is laughing. The world doesn't want anything to do with it anymore. That's why the BRICS alliance was made, because of, or is now being built on the back of this world dollar de-dollarization. I mean, this has been going on for quite a long time.
During the interview, Gregory Mannarino criticized former President Trump for threatening BRICS nations with 100% tariffs to enforce dollar dominance, calling it a sign of weakness. He argues that strong entities don't need to make threats and claims this move reveals U.S. economic fragility. In a statement shared on November 30th via his Truth Social platform, Donald Trump demanded a clear commitment from BRICS members, Brazil, Russia, India, China, and South Africa, to refrain from supporting or creating any rival currency. Known for his America First stance, Trump declared that such actions would face severe repercussions, including 100% tariffs on goods from BRICS nations and restricted access to the lucrative U.S. market. Despite claims of opposing the Federal Reserve, Mannarino accuses Trump of supporting it and empowering its control. He warns that this exposes the U.S. to vulnerability as the world resists the Fed's financial system. Let's get back to the interview.
This threat, we'll just focus on the BRICS nations real quick. So Trump made a direct threat to the BRICS nations saying, you better stay in the dollar. Don't you dream of circumventing the dollar or replacing the dollar, or else you're going to be faced with 100% tariffs. Look, here's my take on this right off the bat. Threats never, ever come from a position of strength. When someone, a person or a nation threatens another nation or a person here, it's always from a position of a weakness. If someone is strong or a nation is strong, there's never a reason to threat at all. It's just kind of an understood thing. And unfortunately, what Trump has done here is reveal how weak we are. And the fact that he is in full support of the dollar, which means he's in full support of the Federal Reserve. This should not be a surprise to anyone. I know a lot of people have been duped, lied to, deceived, distracted, saying that Trump had somehow, we heard the same nonsense last time, was going to get rid of the Federal Reserve, and all that did happen was the Fed was vaulted to the pinnacle of power. The Federal Reserve clearly has an ally in the White House behind the resolute desk, something I warned would happen. I said before the selection, no matter who was selected, I said we were going to know who the real traitor was, and that would be a person who would be in the pocket of the Federal Reserve. And clearly that is what we have here. What Putin said, or the Kremlin said, was Trump's threat will more than likely cause the world to back further away from the dollar faster. And I really believe that's good. Again, this is not negotiation. A lot of people, they go, this is Trump negotiating. You don't negotiate from a point of weakness. If you're going to reveal how weak you are, No one's going to want to negotiate with you here. The world doesn't want anything to do with the dollar anymore. They don't want anything to do with our products anymore. Unfortunately, the United States we're in a losing spot here. And I don't think this is a surprise to anyone. And what does it really come down to? It comes down to, well, you could look at this as a mismanagement of the financial system or something that's deliberate. In my case, in my situation, I think the people that follow our work, they realize that nothing is happening by accident. And the BRICS nations that we heard from, he also threatened Mexico. The Mexican president's like, this ain't going to fix anything. You got Canada saying they're going to retaliate. You got China saying with tariffs. You got China saying the same thing here. I mean, come on, man. This is not using tariffs as a negotiation tool from a perspective of weakness. You don't threaten. You don't threaten anyone ever or a nation from a perspective, again, of pretending to be a feigning power. It's obviously the polar opposite. And unfortunately, the world's going to see it that way. And that means the dollar and the United States is going to fall faster from whatever position it may have now in the world, unfortunately, bro. And it's just too obvious. But this means, again, look, most people have no clue as to what's going on. A lot of people have been deceived and duped into believing that they have some kind of a savior deity brought to them in the form of a Donald Trump, which is obviously, we know that this always ends in miserably when people put their faith in the wrong place. But that's what's going on here, unfortunately. A lot of people are going to be disappointed, and we're going to suffer. We're going to be I've been saying this, forced suffering here in the United States and around the world as central banks fulfill their goal. Imagine really the situation we have. It's almost surreal when you have a president here trying to force the world into using central bank issued notes, in this case, the Federal Reserve. What does this do? Does it weaken the Federal Reserve or does it make them stronger? Obviously, it makes them stronger. And that's where we're going to, I'm just going to say this right now, man. Look, there's no way that the Federal Reserve is going to be much stronger at the end of Trump's tenure this time.
Investors sometimes consider including commodities as a portfolio hedge during inflationary periods. Higher inflation tends to enhance commodities' attractiveness. Investors should be prepared for frequent higher and lower changes in commodity prices. What is the likely direction of commodity prices going forward, and how might investors consider positioning their portfolios to reflect these trends? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.